level of trust in the investment profession in general has eroded substantially. This is after 2008 and so forth. And from my perspective, one of the things that misses is that individual advisors, and particularly the type of advisors that are represented by the CPWA, Chartered Private Wealth Advisor designation that IMCA sponsors, are committed to their clients. And they're committed in a way that professionally is a fiduciary concept, meaning they put their clients' best interest first. I think part of the problem is that individuals and the public at large doesn't understand that distinction. So one of the things that we need to do is highlight the fact that people in a fiduciary obligation in fact expect and get from those advisors that do that great service that is in their best interest. It's going to take a while to do that, but it's a different motivation than the investment bankers and the large financial institutions when you look at the relationship between an individual advisor and their client. In general, the boutique firms that are the small firms and the independent shops have more flexibility to render totally unbiased advice. One of the things, unfortunately, that, in my opinion, has happened is that the major firms have issues with regard to compliance, regulatory rules. And one of the issues is that a lot of people misunderstand when we have a lot of regulation that's going to solve problems in terms of fiduciary relationships. It's a conversation that has not been completed. In some cases, the major firms would say, we want not to cross any legal boundaries, but that sort of pretext prevents the individual advisors from being a little bit more open in terms of their putting the client's best interest first. So I would say the boutique firms generally have more flexibility and do a better job at that. I think the major firms have some changes to undergo to get there.